What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Tesla stock, ticker symbol TSLA, on a variety of time frames in anticipation of the next trading day, Tuesday, May 7th. Alright guys, Tesla stock here today up $3.57 per share. That's plus 1.97% in regular trading hours, essentially flat here in the after hours. Either way, volume's low. Take that with a grain of salt. Let's take a look here. We're going to start by doing a quick volume profile analysis to pull out some bias that we can't see with the regular price action. We will then take a look at the psychological levels that I'm going to make sure that I'm aware of heading into tomorrow. I think you probably should do so as well, because that's what the smart money's going to be watching. And then we'll finish out with both the expected move and the directional bias coming out of the chain. So let's get started here with that volume profile analysis here on the 5-minute chart. This is just peeling back the onion, taking a look under the hood. If we pull this up, we can see that this pop and fade that we got is obviously something I want to take a look at here. And what we see is we actually see, first of all, contextually speaking, it's important to understand that it's very common to have that first volume bar of the day be the highest, if not, well, I should say one of, if not the highest volume bars of the day. However, we held a little more volume into the day. It was only one additional bar though, okay? That correlating with a pretty big push. There's wicks on that bar, okay, but they're not tremendous. That to me is a small amount of bullish bias. What would make it a large amount of bullish bias? Well, if that was 3, 4, 5 candles in a row, that would be big bias. Just an additional candle to what is normal, exceeding that volume, that's a bit of bullish bias. Now, as we move through the morning here, honestly, guys, volume held on a little higher than what is normal. Usually I like to see, or what we typically see, is volume fading a little quicker than that. Like, it would chop the top off of these on a more contextual day. However, we're getting a mix. It's not like we're seeing high volume red bars and then the green bars just tank to half the size. We're seeing it, you know, a pretty good mix. Here we're kind of maybe a little bull heavy. Here we're a little bear heavy. Here we're a little bull heavy, bear heavy. So listen, I'm just gonna kind of gloss over that because to me that this is a wash. This entire region here is kind of a wash, which is actually really interesting because when we get these aggressive down moves and then little relief pops, aggressive down move, little relief pop, what you typically see is pretty obvious bearish bias and then volume tanks on the pop. Obvious bearish bias, volume tanks on the pop. That's not really what we got. We got volume staying relatively consistent on the pop, actually. Okay, which, you know, bears, it could have been a little bit better. It could have seen a little bit more bearish bias. And bulls, you know, you don't mind that because the price action did what it did, right? The stock fell during that period. So you might as well have it not be overwhelmingly bearish in terms of the volume profile. Now, as we move through the day, we get these little green pops throughout the day. For me, it's not really enough. We continue on, and then we get, you know, we saw 6 consecutive green bars into the close. With the addition of that 7th after hours, that's just going to be a rebalancing bar. Okay, it contributes to actually very little movement. You can see on the candle. Then we get an upside move, 6 consecutive green bars. But, you know, even though we got 6 consecutive bars, the volume size is actually a little bit light. You know, typically I would expect to see that curl be a bit more aggressive into the close. So I wouldn't feel comfortable assigning bullish bias, at least much, into the close there here on Tesla. Let's move on here and take a look at the self-fulfilling prophecy areas, those psychological levels, starting here with the 30-minute chart, a very heavily watched time frame. So this is actually a very good look here. You guys remember on Friday, we reclaimed, you know, we were struggling to reclaim that 50 period. We tried to reclaim it early, used the 200 period as a support level, bounced, and reclaimed the 50 period here on the 30-minute. Now what we've done today, we almost made a retest of the 200 period, not quite, however, bounced a little early. But in doing so, we dragged that 50 period higher, and the 200 period got also dragged higher because it was already in that ascending position. It's a nice thing to see. You have kind of a double level of what could potentially act as a psychological support. I'd like to see that. Bulls, I would expect if this trend continues for any further period of time, I would expect that 50 period to overtake the 200 period. So any downside test of whatever it is at the time, it's important. These are moving levels, right? Keep them on your chart if possible. It might be the 50 crossing over. It might be the 200 still higher. Whichever one is higher, if we test it I don't care what volume it tests. I just want to see a high volume bounce. But bears, getting down through both of those, ideally on high volume, retesting whichever is lower at the time on lower volume, and then rejecting off the lower moving average on high volume. High volume rejection after a low volume retest. That would be a beautiful thing to see if you're a bear. Okay, let's take a look at the 4-hour chart. You can see here that not a lot happening on the 4-hour that's contextual to the 4-hour, because really the only thing specific to this chart are going to be the 200 period, that gray line, and the 50 period. Anything else we can look at better on the daily. But you can see here that the 50 period is aggressively moving upside, which on the 4-hour chart, it's another factor, right? The 30-minute acts quick. The 50 period on the 30-minute moves quick. On the 4-hour, it takes some time. So getting it up underneath new moves is always a good thing to see. Because you're kind of checking a box of an additional psychological level that usually likes to take its time. So having this in an aggressive ascending position is good to see if you're a bull. In the near term, I would like to see that reclaim 177.50. Okay, ideally that's the bottom of that 177.50 to 180 channel that we've been kind of looking at as one level. And if you're a bear, really all you're worried about here is ideally seeing that 50 period level out before reclaiming 177.50 or 180. Okay, now the daily chart. This is going to be the most important chart of all. You can see in the last week or so, we reclaimed that 50-day moving average. Now it's starting to flatten out a little bit. It's still not curling upside, but remember, this is the daily. These things take quite a long time typically on the daily chart. So really what I'm watching here on the daily as far as Tesla is concerned, let's start with you bears. Okay, if you look here, we're about, what is that, 2.5% or so, about 2.7%, 2.8% away from 190. 190 if you're a bear, you know, on a stock that's priced like Tesla, I'm usually looking at every like $10 or so, $10 increments as psychological areas, with something like 200 obviously being a bit more important because it has more eyeballs and more people are going to recognize that. So 190 if you're a bear, I would like to see that rejective tested. Ideally even 185, though I'm not really betting on 185 as a massive psychological level that a bunch of people are watching. Obviously, it's not obvious enough. But if you could hold beneath that, that would be a good way to set up a potentially downside test of the top end of this 177.50 to 180 channel, right? 180. Because ideally, if you're a bear, in the near term, you'd like to get back below that channel, below 177.50, which sets you up for a downside test of the 50-day moving average, which you want to break eventually. Bulls, a hold of 180, the top area of that channel would be beautiful, but the goal really is to get above and hold above 190. Okay, that's kind of like the area, the ranges that I'm looking for. A break and hold of 190 really kind of sets us up for that next level, which is $200 a share. Okay, now, implied volatility. Let's zoom out a little bit so we can get a little better context and go to the last, I don't know, 2-3 months. Now, you can see here that IV is sitting relatively low on Tesla. Okay, if you've been experiencing some IV crush because maybe you bought some contracts when IV was higher, this is your culprit. Also understand, as IV comes lower, conditions become more and more favorable for those looking to buy new options. And typically they become less favorable for those looking to sell to open new options positions. Okay, because IV is already low. A lot of Vega value is already sucked out. Now let's do expected move. Okay, you can see obviously we had earnings recently, so there's no earnings between now and Friday because the next expiration we have is Friday, May 10th. The expected move by Friday's close compared to today, Monday's close, is plus or minus $8.10 a share. So what we can do is we can divide that by 4 trading days, Tuesday, Wednesday, Thursday, Friday. But we're not done, but just by doing that, that's a lot of people might do that, but they're missing the fact that that assumes 4 green days in a row or 4 red days in a row, which is kind of a silly assumption, right? So what I'm doing in this market, this changes, but in this market, I'm adding back about 50%, which gives us an expected move for tomorrow's close, Tuesday's close, compared to today's close of about plus or minus $3.04 a share, approximately, about plus or minus $3. That's the volatility expectation being priced in by the market with a little bit of guesswork to try to pull out the next day, even without day-to-day expirations. Now, directional bias. I know some of you are curious. Let's take a look. The actual volume today in the chain, 1.42 million total contracts traded. 849,000 of those today were calls, and 571,000 or puts. So that is a bullish bias on the overall call put ratio today on Tesla. And if we break it down by the short-term speculators, the 0 to 20 delta range, 293,000 calls, 222,000 puts, which again is a call side bullish bias out of them. Listen, if you're getting value out of these daily Tesla uploads, I ask you to do one thing. Takes half a second, 100% free. Leave a like on the video, and then get out of here and enjoy your day. I appreciate it, and I'll see you in the next one.